All right. So once you've applied for a mortgage to buy a home, there are some key things to keep in mind. While it's exciting to start thinking about moving in and decorating, be careful when it comes to making any big purchases. Here are a few things you may not realize you need to avoid after applying for your home loan. Number one, don't deposit large sums of cash. Lenders need to source your money, and cash isn't easily traceable. Before you deposit any amount of cash into your accounts, discuss the proper way to document your transactions with your loan officer. Number two, don't make any large purchases. It's not just home related purchases that could disqualify you from your loan. Any large purchases can be red flagged for lenders. So, people with new debt have higher debt to income ratios. Now, that means how much debt you have compared to your monthly income. So, since higher ratios make for riskier loans, borrowers may no longer qualify for their mortgage. So, resist the temptation to make any large purchases, even for furniture or appliances. So, wait until after the transaction closes. Number three, don't co sign loans for anyone. When you co-sign a loan for anyone, you're making yourself accountable for that loan's success and repayment. With that obligation comes higher debt to income ratios as well. Even if you promise you won't be the one making the payments, your lender will have to count the payments against you. So remember, do not co-sign anything for your aunts, uncles, cousins, anybody. No co-signing. Uh, don't switch bank accounts. Okay. Lenders need to source and track your assets. That task is much easier when there's consistency among your accounts. Before you transfer any money, speak with your loan officer. Okay. So don't switch bank accounts. I think this is number five. Don't apply for new credit. It doesn't matter whether it's a new credit card or a new car. When you have your credit report run by organizations and multiple financial channels, for example, mortgage company, credit card company, uh, auto company, it will have an impact on your FICO score. The lower credit scores can determine your mortgage interest rate and possibly even your eligibility for approval. So another one is don't close any accounts. A lot of people do this. Now, many buyers believe having less available credit makes them less risky and more likely to be approved. This isn't true. A major component of your score is your length and depth of credit history, as opposed to just your payment history, and your total usage of credit as a percentage of available credit. Closing your accounts has a negative impact on both of those aspects of your score. So again, do not close any accounts unless told by your lender. Okay. Now, in short, consult an expert to sum it up. Be upfront about any changes when talking with your lender. If there's any blips in income, assets, or credit, should be reviewed and executed in a way that ensures your home loan can still be approved. If your job or employment status has changed recently, share that with your lender as well. Ultimately, it's best to fully disclose and discuss your intentions with your loan officer before you do anything financial in nature. So, again, guys, try to avoid these items when you guys are applying for your loan. So, bottom line, you want your home purchase to go as smoothly as possible. Remember, before you make any large purchases, move your money around, or make any major life changes, be sure to consult your lender, someone who's qualified to explain how your financial decisions may impact your home loan.